We are seeing some of the central banks here in EM Asia, for example, that are selling debt just to finance fiscal stimulus. Is that a worry to you, that the fiscal sustainability in this part of the world?
Yeah, it is. So, I mean, there are sort of three that spring to mind. India's been dabbling with this a little bit, Indonesia and the Philippines, all been engaging in quasi sort of direct financing of the government's deficit through the central bank's actions. And in normal times, you'd have thought markets would have thrown up their hands in horror and sold the currencies and the bond markets of these countries very, very sharply. Now, we're not in normal times. We've got COVID-19 and the rule books on so many things are being ripped up that they're getting away with it. And also because of the huge amounts of liquidity sloshing around, I think people are willing to just let this ride. But there may come a time where this is refocused on, and I think it could be something that comes back to haunt later on.
I'm wondering, Rob, for the Fed in particular, is the ball now back in its court with the stimulus package on hold? And do you see the Fed perhaps exploring options like buying longer-term maturities as part of its QE plan? Is that an option for the Fed?
Yeah, I guess it is an option, but I think the one thing that you'll never hear the Fed or any other central bank official or head actually saying is, you know, folks, actually, we've got nothing really left that's of any real relevance. So, yeah, they can go down those sorts of routes. They can dabble with a little bit more sort of approach to sort of squeezing, flattening yield curves a bit more. But ultimately, you've got to ask your question, what good does that actually do? What good does it do to expand QE programs a little further from where they already are? Would it do any more to get target Fed funds rates even closer to zero than they currently already are, having roughly already ruled out negative rates? And you come back really thinking this is all pretty marginal. It's fiscal policy that's required now, and that doesn't seem to be likely to come through.
In Asia, Rob, how encouraged are you by the recovery that we're seeing in China? I mean, it is Golden Week, and there are reports that perhaps, tourism is back in full force, 80% of what we saw back in 2019. Is that sustainable? Will the recovery pick up from here, or are there limitations?
I think it's quite frankly amazing what China has managed to achieve by really invigorating its internal tourism market. Getting people to travel to other parts of China. It's got the transportation system going again. It's got retail spending picking up. The airlines and the airports are receiving benefits from this. And the people who are delivering the services are also benefiting. But it's part of the economy. There are other bits of the economy which aren't firing so well. Anything with an export focus will continue to struggle because the rest of the world continues to struggle. So it's partial and it's useful, and they've gone a long way with this, and relative to the rest of the region and relative to the rest of the world, it's an impressive picture. And there's no reason it should completely sort of fall flat on its face, but I think you've got to think incremental moves from here will be perhaps a little harder to achieve.
And what kind of economies actually benefit from that China growth story, do you think? We were just showing a chart about just how there's such a growth exceptionalism, but much of the region has basically contracted for much of this year.
Yeah, that's right. So most economies in our APAC region are now seeing some form of recovery. The rates are quite slow. What China's doing is great in some ways. It's exactly what it needs, but it doesn't help many other people. I mean, to the extent that there are, Chinese people, internal tourism, spending on Chinese-delivered services, it's exactly what most fiscal stimulus packages should do, have a very low import leakage. But that means that the exports from countries surrounding it aren't particularly going to benefit from this because it's services they're largely spending money on, not manufactured goods, which are being made in Taiwan, Korea, Singapore, you name it, and that could be feeding into this.